Morning. A little bit informal today, just checking on the market, seeing if you guys have any general questions, and let's see what's going on. So yeah, I've been a little bit out of the market last few days. I just barely looked near the middle of the day yesterday, and just look at the main ES for now. We'll look at a few other features. Here. All right, so here's ES. It's last few days. Let's look at, say, 1 month chart. Yeah, besides yesterday went up quite a bit. Looks like starting to consolidate a little bit today. Have that gap from the 7th. It touched the gap later, the 11th, then just shot up from it, almost use it as a support. And we're consolidating a lower part. Let's look at a bigger time frame here. We're just up, up, up. Seems like there's no end in sight. Pretty much near the all-time high. I think we touched it a little higher right here, but we're very close to it again. Decent amount of volume at 51. Well, let's just look at SPX instead, because sometimes the volume on futures is a little off. Yeah, I mean, the chart looks almost identical anyway. Up, up, up. Let's look at copper. Seems like it went up a lot today, right? Whew.
Yeah, lots of pain.
Yeah, that shot up. There's no copper volatility that I'm aware of. I think you can go on like the CME group, and then they have different underlyings for that. But you have to download some program to see it. I never was able to figure that out. Has anyone ever tried that? Like the copper, there's like different volatilities directly from the futures, like CBOE. All right. Yeah, it shot up today. Let's see. Yeah, a lot of volume at this level now.
You have a strangle on copper at the moment, correct?
No, I got rid of it. If you
Oh,
look at all my 5 paragraph essay from the weekend, I need more funds for my taxes. So I actually closed all my strangles on Monday morning.
I'm a little late to that party.
Yeah. Uncle Sam is a little mad at me. So I gotta start doing quarterly payments. Um, yeah, so for the future stuff, I think I could get away with taking out maybe 5 to 10,000 on my futures account. Uncle Sam is breathing down my neck here. Um, I was not withholding nearly enough taxes that I needed to. So I was gonna decide to cut gold because the gold's capital requirements is pretty high, at least right now. It's a lot higher than oil was. So oil's usually around 6K for a safeguard, but gold's like 9 to 10 grand. You could get away with doing a quick credit spread instead, about 100 with or so, but then you're having to wait for that decay too. So I decided to cut gold. I think I'm gonna be good with just cutting gold and an occasional strangle I might be able to put on. We'll see how it goes. It's pretty much all I can say at this point, but a few more guys joined in. Okay, okay, and Keith, I think, just popped in. All right, any other underlines you want me to research while we're here? Like a gold and oil, go on. What is that? That's not gold. Global connectors, public connections. Never heard of them. Okay. Why is it not showing? What? On my phone, I just type in GC and it works. Okay. So yeah, gold had a big run up, and then with the CPI data went down a bit, but now it's creeping up a little today, it looks like. Not that big of a difference. Hopefully the volatility stays low, because I know the last 2 days volatility went down a bit. If you're currently in gold, I would probably stay a little longer. You might hopefully get close to break even if the volatility decreases a bit. The main reason why the short-term losses on gold was happening was because volatility shot up. It wasn't as much of the stock price or futures. Like right now, volatility on gold's down almost 3% again. So if you look at GVZ, yeah, see a big gap down. This was after the data yesterday. So if you're selling, you want volatility to go down. And ideally, you start to sell when it's high, so you get down when it's low. The issue is when we started it, we were even lower than the current price. So you have to wait a little bit and just let the data decay it out a bit. Let's look at oil real quick. I was considering getting out of it, but I think it still has a little bit more to go, and there's no rush here. On my oil, I'm at a 60, I think. Yeah, 60 put, but I have a 66, 65 as well. And there's nowhere, we're not close to that yet. So I don't see any no real reason to get out of that yet. And you can try to slightly overtrade and get out and then get back in again. That's what I did before because I had a 50, I think 54 put. And I got out of that early and I sold a 60 put. And now that's up a bit. But either way on that, if you want to be a little more active, you could get out of the 60 naked puts and then re-enter a new one if you want. All right, that was just a quick market outlook. I'll leave it open for questions at this point, or just general thoughts. So the floor is open. Todd, you probably have a question. It seems like your brain's like, I'll wait for someone first and then I'll answer. You might as well.
No,
Well,
it's
this is
okay.
all new to me, so
Oh, I'm like, yeah, that was a little overwhelming.
huge learning curve.
It's a bit of a learning curve. Yeah. So few general thoughts on futures. They work very similar to individual stocks. So if you look at, say, gold, you could look at any of the like GLD, let's say ETF on gold, and it pretty much moves in the same directions. For oil, you could look at some of the really big oil producers, like Chevron and stuff like that. I forgot the name of the symbols. There's some that have just
I guess
stock-based oil.
Exxon.
Yeah, Exxon, yeah, stuff like that. Um, the thing is with futures are the span margins a bit of a learning curve. So the reason why we're doing this with futures is they are highly leveraged. So you got to be very careful in where you're putting your strikes and where you're going to stop out. So I'll definitely paper trade those a few times if you could, or do really small position sizes first before you're at like a normal allocation. But otherwise, with span margin, the amount of money that you need on the trade is significantly less than the actual value of the futures contract. So if you look at, say, ES, that's futures for SPX, that's going to be, oh, I forgot off the top of my head. I think it's 50 shares of SPX. I don't know if someone could correct me on that one. But so if you bought like 50 shares of SPX, that's a lot of funds. It's going to be, what about 5,200 or so times 50. You need a ton of money to do that. But for ES futures, if you sell a naked put on it, you need about $3,000-4,000, and then the rest is based on your margin requirements. So they work the same way as stocks, but they are highly leveraged. That's first thing to remember on that. And we'll talk one-on-one more about how the futures work.
On your covered strangle, on your MES,
Yeah,
the first put that you sell, you're going just outside the expected move.
yeah.
Okay.
Yeah, I go literally the strike right past it. So when I posted it yesterday, I wrote what the current MES was at and the expected move. I think it was like 170 or something. So then I looked for the strike right past it.
And then you go 100 points lower after that. Is that right?
Almost always, yeah, I almost always go around 100 points lower. It depends on what the VIX was and volatility. Right now the VIX is relatively low. I pretty much want to look around a point 0.1 delta on the second naked put, and it has to be worth the premium, obviously. Where I can look it up. I didn't get a ton in premium on that particular option, but the one near the expected move was pretty high. I forgot the exact numbers. I gotta look it up. But
It should be around 50, 70 right now. I went out
yeah,
30
putting a
days.
I forgot how much premium I got on that 49.50. That was the lower one. Because I sold a 50.50 and a 49.50. I think it might have been around 10 to 12 premium on that lower one. And then the rest was the 50.50. Because the 50.50 was paying about 17, 18, I think. I might be a little off there. But the total was 33.75. So yeah, obviously the one that's closer to the at the money will pay more than the one that's further away. Um, you could look at some basic support resistant levels there too and see, are you okay with the second strike getting assigned? So again, you're aware, and others that are watching, got to make sure that you're okay being assigned. My dog's trying to help here. So you got to be okay being assigned on the strikes, obviously. We're not going to be closing them out or stopping out on it. So the first strike is right outside the expected move, and I like that because you get good premium, and there's a slightly low chance of getting assigned. That doesn't mean you won't, but at least you get the good premium for it. The second strike, sometimes I remember when I first started these out last year, the second strike I would sometimes try to close out early, especially if I could, and I was worried about getting assigned on both contracts. And then I could just sell a second one in a future date, knowing I was going to be assigned on one. So it's really a personal preference on that point. But yeah, I typically look around 100. If volatility was a lot higher, let's say the VIX was at 20 or more, I'd probably look even further. I'd probably look like 150 or so. It really depends on what the premiums are. Good questions. What are you doing?
I really like the naked put selling at pulling in about 550 in premium. I mean, that's just like printing money.
Yeah, it's been working really well. 2 years now, it hasn't lost once. I mean, we are in a bull market, but yeah, it's been working very well. Just be careful on the one thing to look at in the cases where it actually does get close to the strike, see how much of your capital requirement you're using on it, because it's going to be close to $1,000, $1,200 for each MES. A good way to look at that is to just pretend to buy a contract, see what the margin requirement or buying power is. It's usually around 13, 1400. But if we're selling a put at 0.05 delta, we're selling a put much lower than the current price. So it's going to be a little bit less in buying power because we're getting it at a lower entry. It's usually 12, 1300 or so. So just be aware of that if you're just allocating like a certain amount per contract for the trade.
Yeah, I've got those set up. I've got one coming off just about every 7 days.
Yep.
So it's just
I'm at the point now where in my tracking, I just beginning of the month, I'm just assuming they all work, and I'm putting in this is the profit for each week, and then if I have to, I'll fix it. But it's like I'm pretty sure it's gonna work, so I'm just like assume it will.
Lance, I have a question.
Yeah, good.
Nice speaking with you for the first time.
Oh, yeah.
I just joined a few weeks ago.
Sounds
Uh,
good, Chris.
I have a question. I just opened a Tasty Trade account
Okay.
and I'm in the process of funding it. And I wasn't sure how much money I need to put into the account so I can do just future trades and nothing else.
Okay, good question. When I first started the Tasty Trade account, I only put in $2,000. I
Okay.
applied for the works, which allows you to do everything, futures and all that. And they
Yep.
approved me to do it with $2,000. Now, I'm not going to recommend just using that. That's it, because you're going to need more than that, especially
Right.
if you're doing a few different trades. Um, just general numbers for most of the trades I do. If you do an MES naked put, the ones that I do every Sunday, that's
Okay.
about $1,000 in buying power plus the cash you need.
Okay.
The strangles again are about 1,000 per contract. The safeguard trade where we sell two naked puts and then we buy and put debit spread, that's a little bit more. I go around $1,100 on that one.
Okay.
And then the different bigger ones like oil. For oil safeguards, about 6,000, 7,000 or so.
Okay.
Those ones are even more than that. Now, right now, it's around 10,000. A few of the other ones like copper, the euro dollar, Australian dollar, those are usually around $1,000 to $2,000 per strangle. So, what let me ask, what type of trades are you thinking on that? Like a little bit of everything, or you want to
A
start
little
with?
bit, yeah, eventually I just gonna start off with the micro S&P
Yeah,
500. And then, I'm a little scared of oil and gold at the moment, so, so I'm just gonna get my feet wet and
yeah,
just
that's
learn,
fine.
yeah, and just learn the software.
Right. So if you're doing just MES for now, I do a naked, sorry, I do a naked put every week. That's about 1,000. So if you
Okay,
want to join along with everyone I do there, it's about $4,000 total because I'm doing
okay,
one every week for 4 weeks.
okay,
And then the strangles, I'm doing about 90 days out. I typically close them at 50% profit or 200% loss. So I usually have no more than around four of those at any one time.
okay,
So it's another 4,000. For the
okay,
safeguards, I do those every 2 weeks, and those are 4 months out.
right,
That ends up being about eight total. If the first one goes all the way to expiration, you'll need about eight, but usually the first few will go away. So you probably need at least six times around 1,100. So let's just ballpark it around 7,000 for this. So if you
sounds
wanted to
like maybe
follow,
15,000 in the account to begin with.
give or take around 15,000, you could do all the MES that I do. That sounds
Okay,
about right.
okay,
I
all
also
right,
do the covered strangle. That's another 3,000 or so. So yeah,
gotcha,
15 to 20, you can do all the MES. That'll be a good starting point, I think.
okay, all right,
Now,
fine,
with whatever you put in, you're going to see the amount of buying power that you're using. You want to
yeah,
make sure you don't use any more than 50% of that.
okay,
So all the numbers that I was saying, I'm already essentially timesing it by two. So like a strangle, it usually uses about $500 in buying power, but I'm leaving another 500 in cash.
right, okay,
Main thing for when you're first starting out, don't let your buying power go up more than 50%. And
okay,
you'll see that as you do your trades.
all right, very good. Thank
These are
you.
definitely questions to DM me one-on-one and we can go over it.
Okay,
So Tasty will only allow you to trade the micros until you get 25,000 in your account.
Oh, really?
Yep,
Oh, okay. Yeah, I mean, that's just for good safety.
yep,
I didn't, I think I once tried to do an ES near the 30,000 or so. It let me, but I was pretty sure I was over 25 by then.
yep.
And then
25 is the limit.
I realized like I shouldn't be doing ES with that account anyway. It's too small. Yeah, I wouldn't touch ES on less than 25,000. It's way too risky. Good point. Now, unfortunately, like you have to stay with the MES quite a bit, and the commissions as a percent of how much you make are a bit high on MES. Once your account's bigger and you can do ES, your commission's only slightly more. It's only like $1 or two more to sell ES over MES, but the percent of your gain could be a lot higher. So I'm just factoring in as what commissions are you paying divided by the total amount of profit. And then ES is preferred there. So ideally you eventually get to ES, but definitely start at MES first if you don't have the account for it.
okay, thank you.
So is doing futures like you get the biggest bang for the buck from all your strategies, or because of the buying power?
It seems that good question. It seems that way. But you've been doing the credit spreads for about 2 months now, and
Yeah.
those are very buying power efficient. You only need a little less than $500 to do them, and you can still make 3 to 5% usually on those. So there's nothing wrong with those. For the futures though, with the span margin requirements, and since it's highly leveraged, you're able to get really far out of the money, or you could go really low deltas and still make that similar percent. So also, what I like more about futures is you're using SPX pretty much, and then it's much more diversified instead of individual stocks. So, every day when we do those put credit spreads, we're picking a different company to sell on, and then any slight news could happen and then the stock could tank. But there's a pretty low chance that the whole S&P 500 will tank, right?
Okay.
I prefer futures in general in my account. That's how I'm going to grow them, but I still do the put credit spreads. And I just use a much smaller account size for those. All right, got about 10 more minutes. Just leave it open for any questions. Feel free to ask when you have them.
So I guess while we're here, we could arrange a call, Lance, for the futures
Yeah, I could, if you're
training.
still free right after this call, I can talk with you a little bit if you're
Yeah, I am actually.
free. Okay. My kids aren't booking me yet. I still could probably.
That's fine.
Any other general questions, guys?
Yeah, take a look at my Asana naked put. I thought it was a good risk to reward, and I don't mind getting assigned on that stock and wheeling it.
Which one was it?
Asana, ASAN.
ASA, I never heard of them. Where were you assigned at? What strike?
16.
Uh,
We're 9 days out now.
Yeah.
But its 52-week low is just under 16.
yeah, yeah,
And
15.75 in October. Are you gonna wheel it probably? If you
yeah,
get
if I get assigned on it, yep, I'll do a covered strangle on it.
Yeah, that sounds fine. You only did one contract or you did a few?
I just did one for right now because
Yeah.
if I end up getting assigned, I want to be able to do a covered strangle. So I'll do
Yeah.
this.
What would
Second.
if you got assigned, would you sell around the 15 or 14 on the next one?
Oh, I'd love to sell the 15. I mean, the premiums are really good
Yeah.
for the amount of capital.
Yeah. I mean, back in 2023, it was near 11, 12 in January though. So it was a while ago, but
JP Morgan's got a $27 price tag on it.
yeah, cover strangle would be a good strategy then if you're willing to wait it out. Do you want to get assigned on it?
I mean, I always like just putting money in my pocket, not having to worry about owning the stock, but
Yeah.
I'm
So,
fine with it. We use it here. We use the software here, and there's
okay.
so I follow it quite a bit.
Yeah, it's at a good 16.45 right now. And you sold the 16. It's pretty much a win-win as long as you know what you're gonna do if you get assigned, and you do.
Right.
So you're covered strangle if you get assigned. If not, just keep the premium and maybe sell another put again.
Yep.
Yeah, like if it closes around here, what to sell another 16 put, make a ton of that.
Yeah, and again, $1,600. I mean, it's easy for anybody to do if they don't mind owning the stock.
Right. Do they pay a dividend? I
They
know.
don't.
Well, you're making your own dividends with those
Yeah,
premiums every month.
that's right. That's
I
right.
love those Twitter people that are like, stock doesn't pay a dividend. Well, let me show you how. It's not a dividend.
Right.
They,
Yep.
they want you to think it is. It's not. Um, check out the lifetime chat. I sent a post of a guy with NVIDIA. It's a horror story. He like picked the absolute worst times to do stuff. Like he bought it at like 300. It went down to 100, so he decided to sell covered calls against it. Of course, it shot up, and he kept rolling the solds. And then, which is, that's not the end of the world. I guess like it feels okay with the initial sell at around 100 covered call and just take the short-term loss. I don't think he was thinking that though. But anyway, it shot up. He kept rolling the shorts, which again, not really the end of the world. It's just annoying because you have to wait until the options expire. But then the big one, and he admits it, the big one was when he sold shares of NVIDIA to have more just account like value so he could keep the trade going. And then he had like 1 or 200 shares naked on NVIDIA because he sold, I think, 3 or 4 calls and he only had 200 shares. So
Oh,
he got killed. It's like,
it can
don't sell
happen.
naked calls. Like, it was all the liquidity. I'm like, don't do it. It's like, just take the initial loss and like wait it out. Like if you have 300 shares of NVIDIA at say 300 and you're down on your strikes, just take the loss. Like, don't try to be funny and sell, some of your shares and think this is horrible. Don't sell naked calls in NVIDIA. That was the main thesis there. He's gonna be down a few hundred grand on that.
Yeah,
It's rough.
couldn't handle that.
Mm. Any other quick questions? And then I'll talk with Mike one-on-one. Any other quick questions, guys? All right, I'll end it here. Mike, I'll send you a DM, all right?
Okay.
Thank you.
So we're not going to stay on this one then?
No, it's about to cancel. I gotta make a new one.
Okay.
All right. Bye, guys. Have a good one.
Thanks, you too.